Yeah. So we've got non-farm payrolls this morning in about 15 minutes time. So what I'm going to do is take a look at where we are in the markets prior to that event. So here's our 4-hour chart of the ES. Okay. So I've got this series of 1, 2, sorry, the pen again. Get it here. Sorry. 1, 2, 1, 2. Then this 1, A, B, C into yesterday's low. And I'm looking for that low to hold. Okay, so we got quite a strong reaction up out of it, and this morning we're just consolidating up towards the highs. I'm looking for, with non-farm payrolls, we might get a bit more of a pullback, but ideally I want to see yesterday's low hold and then a sustained move up. The next fib up, 3008 on the ES. That's that 3005 area on the S&P 500. I'm actually looking for it to go slightly higher, 3023, then a 45 to 3050 to 454 in the ES, so on and so forth, up to the 3100 ES area to complete all of wave 3 here. Okay, that's what I'm looking for. But one step at a time, we need to make sure that yesterday's low holds. The retrace fibs, if I just take you, I'm going to keep the chart real simple actually. Just go to the 15-minute chart here. This is the move up out of the low. I think it's a diagonal with 1, 2, and 3 in place, and this morning's low probably the 4, as per that 3-minute chart that's in the ES thread in the forum and above you in the post here. So we should get a pop up and then down. So if I just take that through to the 3-minute chart that I posted earlier, what we've got therefore off yesterday's low is an ABC 1, 2, ABC 3 into the 1.0 extension, ABC 4. This 786 retrace is based on the length of this 3 measured off this 2. So we hit that on the nose. That is also today's lower blue line. I think we've got an A, this hopefully is a B, and we get a C of this 5 up to make a new local high. Okay, so ideally a pop initially, then a drop. We're going to get a sharp retrace if this is a diagonal that's deep. Okay, that needs to hold a retrace fib and then up, and up in a sustained way. If we can get a full 5 waves up in the ES, not this 5 waves, this would be wave 1 of that 5. If we can get the 5 up going and hitting the fibs as we move along, then yesterday's low should not be revisited at any time until after the completion of all of this upside move, and we're in the much, much bigger primary degree wave 4 correction in the US indices. But for now, let's watch the support zones and see what non-farm payroll brings. Usually brings volatility in the indices and the metals, okay?